Right, let's give you that markets update now. And local trade in need of some good news today after the flat close in the last session. The JSE tracking weaker global markets today as investors grow increasingly cautious about interest rates remaining higher for longer and a possible U.S. government shutdown. Jimmy Moyaha is an independent analyst joining us now to give us a quick sense of how local trade is shaping up at the JSE. Jimmy, good morning to you, sir. Let's kick off the conversation with that quick overview of how the local index, including the currency, are faring thus far.
Morning, Colin. Morning to the viewers. Local markets open in the red, which is interesting given that overnight U.S. markets were in the red. So Dow Jones, S&P and Nasdaq all shedding more than 1% in yesterday's trading session. You'd think that would filter through to Asian markets, and yet Asian markets were in the green, with Hong Kong up almost 4%, Tokyo up about 1/5%, and Sydney sort of flat to marginally lower. On our local side, we've seen that our markets have opened in the red, with the top 40 down about 1/10%, but financials leading the charge there, down about 1/10% there. The rest of the market seems fairly flat in early trade. On the currency side of it, though, the rand is back above 19 rand, sitting at 19 rand and 6 cents against the dollar, sitting at 23.17 against the pound, and 20 rand and 15 cents against the euro. We had breached below the 20 rand mark against the euro in the last couple of days, but we seem to be back above that. But against the pound and the euro for the month, we are still seeing that the rand is holding its ground. I think it's about 3% up against the pound and about 1.7% up against the euro for the month, but weaker against the dollar. So obviously that dollar sentiment and the expectation that rates will remain higher for longer in the US, giving the dollar much needed strength, and we're seeing that to the detriment of the rand. In terms of commodities, a quick look at that. Gold has reached the $1,900 a barrel level, $1,900 per ounce level, so we're sitting at 1,898. That's a key support level and psychological level as well at 1,900, to see if we would be able to come back above that level, or if we're now going to see continued bearishness on the gold price. On the oil side, though, that is back up at about $94.60 a barrel. We know that we got closer to the $90 a barrel level last week, but obviously the supply conversations that have been happening around the oil front have had an impact on that market.
Well, let's pick up on those oil prices, because they do still seem to be climbing amid supply concerns. Talk us through what we are likely to see in the coming days.
Yeah, so we, if you remember back to last week, we saw an announcement from Russia saying that diesel and other fuel components are going to be under an export ban in an effort to reduce the cost that is having on the local market. And there were obviously concerns around whether or not that would affect the overall oil supply and oil price movements. We know that there have been a couple of moving parts in the oil picture. We know that OPEC has continued its supply cuts, and they forecast that between now and the end of the year, I think there'll be a cumulative 1.3 million barrels per day that'll be cut between OPEC and Russia and the other members of the bloc. You'd think that that would ordinarily mean that the US side of it would be able to pick up on that excess supply, or that excess or fill that vacuum, but the US has been contending with its own list of worries as well. They've lost a couple of oil rigs. I think they've lost 8 recently, bringing the total to about 114 or 115 odd rigs since the start of the year, which means they are unable to now use this as an opportunity to ramp up their supply and fill that vacuum. So OPEC as a bloc firmly in control of the oil price at this stage, and the market share that they have in that respect. So looking to see whether or not things pick up from an economic point of view. We know that, as you alluded to, that potential U.S. shutdown would have a detrimental impact on the oil market and on what we're seeing, because that would they are the world's largest consumer of oil, so that would definitely have an impact on what we see from an oil price perspective, but also the Chinese demand side of the picture, as they are the world's largest importer of oil. So big powerhouses on either side of the world giving a lot towards the demand side, but OPEC sitting literally in the middle and trying to maintain that oil price at a comfortable level for them, regardless of the economic conditions around it.
Let's talk company news. Global mining and trading giant Glencoe kicking off a retrenchment process. That's not always good news, Jimmy. At its Impunzi coal operation, these are in Mpumalanga. Talk us through the factors that have led to this decision and potentially the jobs. How many jobs could be at risk here?
I'll give you three guesses as to what factors have led to it. You only need one of those guesses because it is Transnet. The parastatal's inability to provide stable rail networks has meant that companies like Glencoe and other miners in that area are having to face the reality of retrenchments because their mines are not operating optimally. So Glencoe basically came out and said, look, the situation is such that we expected to push out X amount of tons. We're doing 60% of that or less, and therefore it is no longer viable for us because we're dealing with ailing plants. Now, if you look at the coal mining companies that are situated in Mpumalanga, a lot of them are dealing with mines that have been around for quite some time and that have quite a bit of mileage on them. And that doesn't seem to be the complaining point because Glencoe said they're happy to keep up with the maintenance, but the maintenance must make sense. They're not going to continue maintaining a plant where they're unable to realize the revenues that they need to realize to be able to pay the workers. So unfortunately, they have to now look at it from an economical standpoint and say, we can run the plant at 50%, but we're still incurring 100% of the costs, and we're not making as much revenue as we should have been. Now, this has been an ongoing problem since pre-pandemic. We know that in last year, we sort of got a bit of reprieve for the coal miners in the fact that the average coal price almost doubled, if not more than doubled, but the coal price has now since gone back down, and the demand for that has slowed down considerably, and so you're now feeling the effect of not being able to produce or get as much tonnage out as you are expected to in order for you to meet your targets. I mean, just for context, the Richards Bay Coal Terminal, where all of the coal is exported from, or majority of the coal is exported from rather, is supposed to be doing about 80 million tons per year. We know that we have gotten to below 50 million tons per year in some respects in that with regards to the exports there. And we know that there's no end in sight for the pain that we're seeing from Transnet. We've heard from the Minister of Public Enterprises that they are tackling or aiming to tackle this issue, but nothing's been done. And this has been an ongoing problem for a number of years in an effort to tackle whatever needs to be tackled, and it's to the detriment of the coal miners. So unfortunately, guys like Glencoe, as I said, not the only company sort of looking at these cuts and looking at the realities that they have to contend with, but it is unfortunate that it's coming at the cost of many, many jobs in the country.
Yeah, Transnet proving to be a major hurdle when it comes to economic stability in our country. How long is it going to take for the powers that be to stabilize that institution? Let's conclude the conversation, Jimmy, with the debt-laden packaging manufacturer, that's Nampak. They've raised 1 billion rand from their shareholders. Make sense of those developments for us and what it means for the group moving forward.
So if you remember, Nampak is undergoing a restructuring process, and part of that restructuring was this rights issue that they had to go through. They'd reached an agreement with their current creditors and lenders that they would be able to pay down some of the debt, and obviously some of the debt or some of the requirements have to be met before the 30th of September. I believe there was at least a 350 million rand repayment that was required before the 30th of September. They've managed to raise $1 billion from the rights issue, which was underwritten by the likes of Coronation, and it looks as though they're going to be able to pay back or meet those commitments under the restructure. As part of a bigger restructuring play, they're going to be committing of the 1 billion that they've been able to raise. They're going to be committing about 615 million, so about 61% of that is going to go towards the debt requirements that they need to service. They've also said as a group that the rights issue or the rights offer that was put out was actually oversubscribed, so clearly a lot of confidence still remains within the Nampak stable that they'll be able to turn turn the business around. We saw that following these announcements, the share price didn't move too much, but that's because there's still a lot of ongoing parts that need to be settled. I mean, there's conversations around them completely pulling out of certain regions like East Africa, which will free up even more capital. There's conversations around merging two of their divisions in an effort to optimize productivity and reduce costs and that sort of thing. So the Nampak team very, very busy in terms of making sure that the business gets back on track, and they're trying to reduce that big debt pile. If you remember, their debt burden sits at about 5.4 billion rand in terms of debt, and this 1 billion that they've raised, they're only going to commit, as I said, about 600 million towards that. So they're still going to be sitting with more than 4 billion rands worth of debt that they need to tackle. So the business is looking to really find ways to strategically optimize their performance so that when they find themselves on a better footing, they're able to have a better capital structure, have better debt repayments, and sort of have more value added to shareholders in the long term. So good start for the business, but they still know that they have a lot to contend with. But it seems they have the support of shareholders and investors at this stage.
Independent markets analyst Jimmy Moyaha, thank you very much for that markets update.